day, my students. My name is Rafiu Jamiu Adeniyi, ACA. I'll be our financial accounting teacher for today. Our topic for today that I will be revising with us is correction of errors and suspense accounts. Correction of errors and suspense accounts. I'll be revising this topic with us because we have seen that for the past 5 years, WAEC have tested the topic 3 times. We won't be surprised if it happens again this year. What are we expected to have learned by the end of this topic? At the end of this topic, the student will be able to identify the errors that do not affect trial balance. Number 2, the student will be able to identify the errors that will affect the trial balance. Number 3, the student will be able to define suspense account. The student should be able to define suspense account. And number 4, the student will be able to state the procedure of correcting error. And number 5, the student will be able to correct error and post into journal. From WAEC expectation, the examiner's expectation is that students will be able to identify and differentiate between errors that affect trial balance and errors that do not affect trial balance, as well as they should be able to post errors into journal and correct appropriately. And number next, from past examination, the WAEC examiner's report that students fail to correct error appropriately and post into journal. What is error? What is error? Error in accounting is a genuine mistake made in the preparation of accounts. It is a genuine mistake made in the preparation of accounts. And these errors are divided into 2. We have errors affecting the trial balance and errors that do not affect the trial balance. I will start with the errors that do not affect the trial balance. That is, when these errors are made, our trial balance still remain balanced. The first among these errors include error of omission. Error of omission. When error of omission is made, this is an error committed when a transaction is completely omitted. When a transaction is completely omitted, that is an error of omission. Number 2 among our error is error of commission. Error of commission. Error of commission. This occurs when we record in the wrong person's account. When recording is made in the wrong person's account. For example, sold goods to Adeolu recorded in Adeola's account. You have committed error of commission. Number 3 among our error is error of principle. Error of principle. Error of principle is an error that occurs when you record in the wrong class of account. When recording is made in the wrong class of account. For example, purchased goods, purchased motor van recorded in motor expenses account, or paid motor expenses by check recorded in motor van account. You have made an error of principle. Number 4 among our error is error of original entry. Error of original entry. This is an error committed when a wrong amount is recorded on the debit side and credit side of the account. A wrong amount recorded on the debit and credit side of the account. For example, sold goods for cash 940 naira, but mistakenly recorded as 490 naira. That is an error of original entry. Number 5 among our error is what we call compensating error. Compensating error, or error of original, or error of compensation. Compensating error or error of compensation. This is where errors cancel out each other. That is, the same errors are made in 2 opposing accounts. The same errors are made in 2 opposing accounts. It could be overcast of an account and overcast of another account, or undercast of an account and overcast of another account. This error will cancel out each other and our trial balance will still balance. The number 6 among our error is complete reversal of entry. Complete reversal of entry. This is an error committed when you record on the wrong side of the account. That is, the account that's supposed to be debited is credited, and the account that's supposed to be credited is debited. For example, sold goods for cash 200 naira. A proper double entry, the sales account should be credited and the cash account should be debited. But if you credited the cash account and debited the sales account, then you have committed error of complete reversal of entry. In 2015, question number 2B, this question was tested. students were asked to list and explain the errors that do not affect the trial balance, which we have just itemized and explained to us. And when these errors are committed, you are to correct the error and journalize, and with proper narration only. We correct the error and post into journal, and we put our narration only. After this, we'll come back again and continue from there with errors that affect the trial balance. Thank you very much. Welcome back, my students. In our last section, we discussed errors that are not affecting the trial balance. Now we'll continue with errors affecting the trial balance. That is, when these errors are committed, the debit side and the credit side of our trial balance will fail to agree. And the first among this error is known as single entry or one-sided omission. That is, if you have to post in every transaction, we must post in double entry. That is, one account must be debited and another account must be credited. But if you debit an account and no account is credited, or one account is credited and no account is debited, then this error will affect our trial balance. Number two among our error is casting error. Casting error can be overcast or undercast of figures. When this occurs, then trial balance will not agree. Number three, transposition error or transpository error. That is when you make a wrong arrangement of figure. 905 recorded as 509. That is transposition error. Number next is recording on the same side of the account. Recording on the same side of the account. We are supposed to debit and credit, not to debit and debit or credit and credit. When you do that, your trial balance will fail to agree. And we also have trial balance error. Probably when you are posting item into trial balance. In the trial balance, you are supposed to post assets on the debit side, expenses on the debit side, income on the credit side, and liability on the credit side. If you fail to do any of this, then our trial balance will fail to agree. Then there are so many other errors as we must have been taught by our teachers. And when errors affect trial balance, that will warrant us to prepare what we call suspense account. We prepare what we call a suspense account. What is a suspense account? A suspense account is an account that is prepared temporarily to record the difference in the trial balance until the errors are dictated and corrected. I'll come over that again. Suspense account is an account prepared to record the difference in the trial balance temporarily until the errors are dictated and corrected. So when there is a disagreement in our trial balance, that is the debit side and the credit side did not agree, the difference will be taken to the what? Suspense account. Like I mentioned earlier, in 2015, when the question was tested, the number 2, the A part of that number 2, asked students to define suspense account, while the A part asked, the B part asked them to what? List and explain errors not affecting the trial balance. And now I will go to the procedure that must be taken in correcting error. Procedures that must be taken in correcting error. Before we do that, when errors affect trial balance, we are to correct that error and post into journal as well as post into suspense account with proper narration. And the procedure of correcting error include, number 1, identification of the error. That is, you must identify the type of error that is committed. It is an error affecting trial balance or error not affecting trial balance. If it's not affecting trial balance, it is error of principle, error of original entry, error of commission, whatever error it is, we should be able to identify. Number 2, we should be able to identify the account that the error is affecting. Which account is the error affecting? And number 3, we are expected to commit the error, or we should ledgerize the error. Post that error in the ledger. After posting the error in the ledger, then we are now expected to correct the error. Our correction then is to be posted into journal with proper narration. If the error is affecting the trial balance, then it will be taken also to what? Suspense account. But if the error is not affecting trial balance, then suspense account will not be prepared. In 2019, last year, question number 8 was on correction of error. Question number 8 in 2019 was on correction of error. In 2017, question number 6, the tested question on what? Correction of error also. Like I said, in the past 5 years, questions have been tested 3 times in correction of error. We must familiarize ourselves with the procedure involved in correcting error. I'll come over it again. Identify the errors committed, identify the account involved, commit the error in the ledger, correct the error, and post into ledger and post into journal with proper narration. In taking an example, for instance, if you have questions such as paid Adeolu 100 naira cash recorded in Adeola account, this is an error that has been committed, which you are expected to correct. First, we say we should identify the type of error. This is an error of commission because recording is made in the wrong person's account. And the two accounts involved are Adeolu and Adeola's account. And in order to correct, we are expected to post into ledger Adeola account and Adeolu account. In committing the error, paid Adeolu cash recorded in Adeola's account. That means the amount has been recorded in Adeola 100 naira like this, which is wrong. We are going to transfer this 100 naira back to Adeolu's account. We need to remove this 100 naira from here by crediting this account with 100 naira and debit this with 100 naira. And that we posted to journal just like this. The account debited will come first, which is Adeolu 100 naira, and the account credited will come next, which is Adeola 100 naira, with our narration being error of commission. With our narration being error of commission now corrected. That is what we are expected to do. And if it is an error that affects the trial balance, we will have something like this. The sales account was overcast by 200 naira. The sales account was overcast by 200 naira. The error committed is an error of casting error, and we have to post that into the ledger. The next, we know that the error affects trial balance, and that will warrant us to open suspense account, because the only account we can identify here is the sales account, and the other account, which will be the corresponding entry, will go to suspense account. We pick the sales account. The sales account has been overcast. It has a credit balance. That means the credit side has been overstated by 200 naira. In order to correct this error, we'll come and debit that 200 naira in the sales account, and the corresponding entry go to the suspense account. We have debited this, the corresponding credit entry goes to the suspense account, and we are going to post that into journal the same way we did for the errors not affecting trial balance. The account debited should come first, like I said earlier, which is sales, 200 naira, and suspense, 200 naira, being with our narration, error of overcasts, now corrected. That is what we are expected to do in correction of error. With this, I believe we have been able to achieve our aim. That is, we can identify and itemize the errors affecting trial balance and errors not affecting trial balance, and the procedure of correcting error, as well as define suspense account. Thank you very much.